And we are live. Hello, everyone. Welcome to a new episode of Blockchain Talks. I'm your host, Dimi H. Today, we are going to talk a little bit about stablecoins. Do they have a future in cryptocurrency? And some of you might have noticed that frequently on social media, I made the claim that stablecoins are as bad as central bank digital currencies. Now, there's a good reason why I'm telling you guys so, which we will explore in this live stream video. Now, before we do that, let's take a little look at the market, because I know some of my viewers here are quite curious on how the market is performing and, well, what price action predictions might be in the future. Naturally, it helps if I start sharing my screen here. There we go. I'm gonna change a little bit the view. There we have it. So this is the Bitcoin chart in the last couple of weeks, I'm going to say. Now, as you guys have noticed, in the last couple of days, last 4 days, we have seen some tremendous uptick after the entire Silvergate crashing, which occurred here last week. Went down, people were once again proclaiming, there's going to be a crash towards 15K levels. I have seen people even make claims the bear market is back. We're heading back straight towards 10K Bitcoin. However, as more and more banks collapsed in the TradFi sense, this is the move that Bitcoin made, and we are back at 24K levels. Something which isn't really surprising to me. People who watch my videos and have seen my previous Blockchain Talks episode, where I did a small analysis of the market, will have noticed that I always say, in case of doubt, zoom out, and that I actually pointed out this structure here. We are back at levels seen, well, even slightly higher currently than those of June 2022. I would even say here August 2022. These are the same kind of trading levels. And as you guys can see, if I were to draw an imaginary line, I'm going to take it approximately here to here, there is quite some potential. I mean, we are in a crap market. There was a golden opportunity to buy Bitcoin on the down low in November, December, and even the early part of this year, where it went below the 20K, and we were quite frankly trading near 16K or even 15K levels. However, starting from June here with the last big crash, that was the Celsius crash here, we have been trading sideways. Then FTX occurred during the last quarter of 2022. Golden opportunity. We had it straight back up. This move here, I'm going to highlight it. This move here was to be expected by reason if you know your technical fundamentals to Bitcoin and some trading fundamentals. You know that the months of November, December is a period whereby Bitcoin always takes a small dip, where not much of trading activity is going on, as many companies are selling off their Bitcoin, making up their books for end of profit of the year. This came back up, and we were straight back towards previous trading levels of July, August, September, even October of last year. And this is, quite frankly, where we are at. This crash nicely illustrates so, and I might even say we established a new form of support slightly below the 20K zone. I'm going to say at the 20K zone. However, as you guys can see, 20K was breached and we headed back up. Plenty of shorts were corrected, were gone. New fresh money straight into the market. We headed back up, and we are back at current resistance levels near 25K. What do I suspect in the future? Well, this is not financial advice, but I presume we will be seeing more movements like these. perhaps one as heavy as this one. It isn't excluded, can always occur, but I do not believe that we will be going underneath 20K in the foreseeable future. Can always happen, not entirely sure. Everything depends on how the TradFi market is doing, and well, if there is some big news going on. You guys can see back in the day, July, August, September last year, when it was still considered a heavy bear market, and whereby I already said in those episodes, you're still in a crap market. There were a few dips, few highs, few lows. Not everything was shaken out up until FTX, and now we've seen some nice growth going on. Now, here's my analysis for Bitcoin. So future-wise, I'm not going to say it's going to get up. I'm not going to say it's going to get down, though I expect for some time seeing patterns like these occur, some nice corrections upward. I'm not going to say up until which level, though I have said it a few times. I expect, with taking pre-hype for the next Bitcoin halving in mind, which will occur in April or May 2024, might be seen by the end of year or having touched somewhere 30K levels. But currently, I believe 25K Bitcoin is still resistance levels. As you guys can see here, if I zoom in, it's 25K. We went slightly above 26, even 27, and then a whole lot of positions for selling Bitcoin induced, and bam, we went back down, and we're currently trading here. So this current trading level near 25K, heavy resistance, might see some correction here and head back towards a lower down level of 22K perhaps. That's in my view. However, like I said, not financial advice, but that's how the market moves, and that's how it has been doing so for the last couple of weeks or even months. Now, let's get started with the main meat. As you guys can have heard me saying at the beginning of this movie or live stream, I said stablecoins are as bad as CBDCs. And let's start with a few block entries that I made on the main website. This one dates from June last year. This is just when Terra Luna crashed. The entire Terra ecosystem fell apart, whereby Terra USD lost its spec, and as a result, plenty of Terra Luna, or now currently rebranded as Lung, LUNC, has been minted, and the entire ecosystem went to shit. What do you want to know about this one here? Sure, I'm bashing a little bit. Perhaps it's a little bit hype from my part, jumping on a bandwagon, but hey, I also want some more viewers. I'm going to be honest in that part. So anyway, hereby I'm saying, look, USDC, Tether, BUSD, and plenty of other stablecoins are all shit. Let me elaborate on that statement. I'm going to pick out the key points of information you guys should retain. Key point, they definitely have a use as an indicator on how much you hold expressing USD. They're also handy to see how much worth is being transacted, swapped, exchanged in a DeFi setting, meaning stablecoins definitely have their use within cryptocurrency, if only to get a firm grasp or a good idea on how much money you are actually trading. All in all, and that's something you should keep in mind even within the cryptocurrency market, the cryptocurrency market is still an alternative market. It is something which exists next to traditional financial markets. And in traditional financial markets, we still make use of flat or fiat dollars and euros, of fiat money. So in order to get a good idea how much profit you're making, well, you will need to do an exchange or get a vague idea how much you are transacting. And on that account, I dare say stablecoins definitely have their use. However, like I mentioned here, the shitty part comes with trust. Trusting that the underlying developers do not fuck up, which is exactly what happened with Terra Luna. Before the crash, they were aggressively buying millions upon millions of Bitcoin. And then the mistake happened, mismanagement occurred, and I believe it was over 80,000 Bitcoin were dumped onto the market and gave rise, which I'm going to show here, to this fall. This one right here. That's what happened. It was BTC being dumped. What is another important aspect? So not only trust. Stablecoins whose value try to imitate the USD are, like the US dollar itself, inflationary in nature. They lose purchasing power over time. Now, that's basically a given, but a given not many people seem to comprehend. Everyone thinks that the dollar has a stable value, and I have pointed out numerous times that the US dollar or even any fiat money doesn't really have stable value. There are agreed upon terms on how valuable it is, and everyone with a iota of financial knowledge knows that the US dollar has been losing purchasing power. Those CPI numbers, which I've harped upon numerous times in the past, stand for Consumer Price Index, meaning how much you can buy for a given amount of money. And CPI numbers are quite important because they give you an idea on how much value the US dollar is losing. Same occurs for the euro, but the US dollar is still considered a world currency. So if you have a stable coin imitating the value of the US dollar, do know that the value of such stablecoin is falling as well. So that's not something you want to have. So if you have stablecoins, keeping all of this in mind, it might be wiser to immediately swap them for cryptocurrency like Bitcoin, which is a proven asset which gains in value over time. Keep in mind stablecoins. There's the issue of trust, and now there's the issue of its inflationary nature due to it being pegged to the value of the US dollar. Second part is a little bit of a combination of both. Stablecoins also maintain value by being backed by a variety of stocks, options, high-value crypto, between brackets Bitcoin, and other assets. To maintain value are either the amount of coins increased or additional assets being bought in. And that's what occurred with the Terra Luna crash. The Terra USD was losing its peg, and well, its value was maintained by a combination of stocks, options, high-value crypto, Bitcoin, and as I said earlier, right before everything came crashing down on Terra Luna, they were aggressively buying millions of dollars worth of Bitcoin before dumping everything on the market. That is exactly what occurred. That is exactly what occurred with plenty of other coins as well. To round it up, this requires trust with the foundation developers, between brackets Guard. By reason, the Terra Luna Foundation had their Terra Guard, which was nothing more than a centralized entity maintaining, well, all of this. So like I said, Guard behind the project to do it fairly. Audits are a must. I've said it long before even Binance started up its recovery fund, before the Binance FUD in December. I already said it back then, but yeah, people don't seem to listen. What happens when this is not the case? We had a simulation with Terra Luna. Assets BTC was massively dumped and reduced it to nothing. The market took a blow, but is recovering. Still recovering, I'm going to say here. Project itself, dead, all lost their money, they evaporated when they were looking at it, nothing to stop it, all gone. Foundation developers A foundation, developers, guard, or group is the same as a central bank. If they pull the plug, it's gone. That should now ring true, especially concerning the silver bank disaster. Hence why stablecoins are as bad as CBDCs. Same setup, same risks. Now there's another article I want to highlight which correlates stablecoins even more with central bank digital currencies. Forgot the title. There was a stablecoin whereby the central entity could hold the transacting of the coins within specified wallets, something you can do as well with central bank digital currencies. Meaning that, for example, I'll take the popular example you've seen on Twitter a few times. People say, yeah, and the social credit in China, for example, and they block your money by reason you said something which doesn't comply with state. Same principle that can be applied to CBDCs. That stablecoin could do the same. Let's get a little bit deeper into Terra Luna thingy. And I am aware I am probably preaching against the choir here, and at the same time rehearsing a part of history. Knowing your history means knowing and understanding what has occurred and how to prevent it. From an even earlier point, Terra Luna is a DeFi platform offered various services, yada yada yada. What happened? Market was going sideways for a long time, still are. As a result, their AMM automated market maker is buying more and more Bitcoin to keep value high. Recently, they want to create a new liquidity pool. Programming error and the entire Bitcoin reserve of LFG or Luna Foundation Guard has been sold. Result, market collapse. USD got completely pegged and did not reach its USD value. Complete market cap of Terra is wiped out. Yada yada yada. So that, in a nutshell, is what occurred. Here on CoinDesk, same thing can be said. Digital investors, and you have the entire history, Jill Chai, e-commerce, yada yada yada. So this as an example of what occurred with Terra Luna. Now, what is the most important part can be taken away here? With Terra Luna, they were pegged mostly against high value cryptocurrency like Bitcoin. And when it depegged, they were actually selling and dumping all their Bitcoin on the market. And they're still, and just even recently, which causes another, let's just say, outrage within the crypto community. Still, Do Kwon is being trialed and needs still to be found guilty where it concerns, the selling of Bitcoin and whitewashing part of the money straight into his pockets. But apart from that, the biggest giveaway here was the reliance on a central foundation in order to keep the peg up, meaning trust, which means the trust was unfounded and it had dire consequences for the entire market. Now, let's focus on another more known stablecoin, which luckily in the last couple of weeks didn't depeg, or if it did so, but corrected quite quickly. You can actually see it here. Nope. Come on. So you guys can see 24-hour. It tries to maintain its $1 peg, but as you guys can see, it doesn't really do so, and there's fluctuations on it. Even depegged for a while with 1 cent even, but went back straight up with a few deviations here. It hurto, unlike other stablecoins. Now, why do I want to focus on Tether? I'm going to show you guys another confirmation of the weaknesses inherent to stablecoins. So what is it? Cryptocurrency of some controversial renown. Going to its history and association with possible fraudulent cover-up of about $850 million by Bitfinex exchange. I'm going to get deeper into it, but if you guys are curious, you can find it on Wikipedia. It used to be labeled as a stablecoin, whose value was backed by $1, but on March 14, 2019, changed this to include loans issued to affiliated companies, meaning there used to be a time where Tether did a one-on-one peg. Each Tether that was minted and brought into the cryptocurrency market was pegged by $1 literal dollar. However, since 2019, they made a few changes and made a wide range of assets backing Tether or the Tether USD in order to maintain its peg. That's where things come in. So its controversy stems from its supposed value of Tether. One Tether equals $1, where after investigation, its real value was actually $0.74 in cash and cash equivalents. This should already raise a red flag, meaning it wasn't pegged one-on-one, but made use of a variety of loans and other assets in order to maintain its peg. But in reality, when doing a closer look and verifying everything, they noticed in reality it wasn't the case. So that's already a breach of trust. Another aspect of its controversy has to do with its supposed audit, which should confirm and create more transparency concerning actual value. Further controversy arose with its alleged role in manipulating Bitcoin prices and the aforementioned role in the fraudulent cover-up within the Bitfinex exchange. The controversy aside, and looking at the aim of the coin, the following is mentioned: blockchain enabled, you guys can see. In short, is to be an intermediate to use fiat money as digital currency worldwide without having to fear about price volatility, unlike other cryptocurrencies, which is the basic definition of any stablecoin. Tether makes use of the Bitcoin blockchain. This is no longer true. Tether now exists on a variety of blockchains, such as Ethereum, Tron, Binance, and others. It is now a multi-blockchain stablecoin, I'm going to say. I've had a dedicated post entry here, didn't open it up, but to give it in a nutshell what it is about. So how do they do so? Well, Tether exists on multiple blockchains, whereby they can exchange for the native current tokens and others, etc. It can be used in DeFi applications. However, in reality, this is something which boils down to semantics. You have Tether on Ethereum, which stands apart from Tether on Bitcoin blockchain or even its own native blockchain. Now what happens, Tether says, okay, it exists on those variety of blockchains. We are grouping them all together and we're calling it Tether. So it gives the impression of being one token, whereas in reality, there are multiple ones. We'll get into it slightly later on. Like any other stablecoin, yeah, this is my analysis and opinion. So implementation weaknesses. So yeah, I'm going to get into it because the same arguments I've given here, despite being slightly outdated, still count. Backed by fiat money, as fiat money has been losing its inherent value since long. In short, inflation. Lack of transparency. While the website regularly updates its transparency update page with the newest and latest statement from their lawyers, almost no factual proof is given. Statements like referrals and documents from the banks holding the money by which Tether is supposedly backed. And I've clicked on it, and here's their new page, and as you guys can see, nothing. So the link has been well, I'm going to need it. Is it the same here? Yeah, okay. This is a transparency page, so let's head deeper into it. This is their reserves: USDT in Tether, Gold, MXN, Euro, CNHD. And as you guys can see, these are all the blockchains they exist upon. On Tron, Ethereum, Solana, Omni, Avalanche, Tezos, Algorand, what else? EOS, Liquid, Statement, SLP, NIA, Statement, and Polygon. Each and every time saying how much is they are authorized to mint onset blockchain, and authorized but not issued, so still lacking. Same applies for Euro. However, that's only on Ethereum and Omni. This one, this one, this one. So they mostly refer to the dollars. However, I do hope it's better now. So they give you the contract addresses. But as you guys can see, there is no real banking statement, which implies, where were we? Yeah. Showing current balances has no factual proof of backing except by word to paper. Meaning, as you guys could see with transparency, they said, look, that's minted and that's the amount we are allowed to do so. All great, but the main issue with Tether hasn't been fixed. Meaning, where is the proof of backing? It still lacks, so their lack of transparency still stands. And some guys might say, yeah, but it's still, doesn't still stand. We still need clear audits. And with the recent Binance FUD in December, Tether was in the crosshairs, and that same issue was once again called upon. Sadly enough, no results. It's history, naturally, which implies that in the past, trust has been breached and still, as a matter of fact, is. Classic fiat money with some necessary extra steps, elaborate cash grab to cash in on current crypto boom, it evident by its history. White paper showing signs it has more in common with the problems of classic money and standing closer to it than being factual digital money. Implementation weaknesses. This is from their copy pasted straight from their white paper, if still around. They say, look, could go bankrupt, or bank could go insolvent, or banks could freeze, you could abscond with reserve funds, re-centralize self-risk to a single point of failure, yada yada yada. It all comes down to them saying, look, we rely on centralized organizations, banks, special interest banks, certain assets. And basically what I was saying here was, look, if we go insolvent, problem is on the guys who are using us. That's one of the weak spots. And that is exactly what happened with the loss of their peg with a variety of stablecoins in the last couple of days. All of them have such statements around. That's one of the reasons why I always, I'm not going to say hype, but I'm hammering on knowing your fundamentals on how something works. And this is the exact reason why I am more or less against stablecoins, why I put them on the same line as central bank digital currencies. Stablecoin USDC nearly regains $1 peg after Circle says 3.3 billion held with silver SVB will be, Silicon Valley Bank will be available. USDC was another stablecoin who lost its peg. By reason, and I'm going to highlight once again this right here, what you're seeing on screen. Like many other stablecoins, they rely on central banks in order to organize and maintain their assets, in order to maintain their peg. If such a traditional bank goes bankrupt, well, we're straight back here. We could go bankrupt, our bank could go insolvent. These are their implementation weaknesses, meaning things will go down. Shit will go down. Simple as that. And naturally, transparency and stability circle is for their USDC. And what do we see here? USDC in circulation, that's this one. Cash at Reserve Bank, BAM, 11.1 billion. Short-dated US Treasury portfolio, that's an important one. Meaning variety of assets backing it. Now, what is the most important part that you guys should know is that this is available at different bank accounts. This is their entire portfolio in reserves. But such a bank goes bankrupt, like mentioned here, 3.3 billion goes down, you can clearly see that a peg will be lost, percentually so, and that a peg will suddenly drop from 1 towards, now let's just say 0.96 cents somewhere. So 4% lost, that's something you are going to feel. That's going to impact the crypto industry and the project in its totality. There's redemption, so all number crunching, stability you can trust, and then they say monthly attestations. Didn't open it that one, so I'm going on the fly here. So this is their accountant's report. That's something you should be able to see, and like I said, here should be available. Yeah, perhaps important for Tether, other investment, including digital tokens, secured loans. Same thing as with USDC. Reports are available, and normally you should be able to see where things are being stored. However, I don't see it. I'm not seeing any bank nor any mention of treasury funds where it's being held. It has been verified by Deloitte or something like it, verified on the report, but no further information has been given, meaning there is a certain degree of transparency even lacking with Circle USDC. By reason, well, as you guys could tell, they have an extensive portfolio held in a variety of institutions and banks. But if something like Silvergate Bank goes down, if something like Silicon Valley Bank goes down, millions or billions could be lost, and the stablecoin could depeg. Not to mention, there's also the issue that despite the various reports they are promoting, despite that, certain stablecoins also have the same function as a CBDC, meaning they can be censored, they can be monitored and seen, okay, we are going to block it off, etc., etc. Think of it, I believe it was with USDC that the article was mentioned. So yeah, with that, I highlighted the pitfalls of stablecoins. This naturally ties in with the subject of last week, which I'm going to highlight once again. The subject of last week was naturally everything concerning regulations, legislation, and the creation of CBDCs. I'm going to show you guys here. Yeah, I've got to search it for a little while. Hang on. It's crypto gaming. Yeah, I'm on my own channel here. Crypto regulations. There we go. Might be wise that I start sharing my screen once again. Boing. What a handy man. So you guys can see I do plenty of videos. However, that of last week, Blockchain Talk, episode 64, crypto regulations and CBDCs. Much better. We talked about crypto regulations and in the end showed the end game where it concerns implementing CBDCs. Where's the roadmap here? So this is the roadmap in Europe where it concerns implementation of CBDCs. I'm going to repeat it. We are currently in quarter 2023, prototyping results. Near the end of 2023, first digital euro is going to be introduced. Other countries already have done so. I'm looking at China with their digital native currency already. I know trial projects for the digital euro were running in Italy and I believe in Greece as well. And then there's the digital dollar project, which is running in the US. And I believe will go in tandem with the digital euro to be launched. So with that, I want to say, do watch out. Reason stablecoins and CBDCs are very alike. And as mentioned in the previous episode, which concerns CBDCs, all regulation and legislation is now pushing away stablecoins so that the CBDCs themselves can be used as an on-ramp towards cryptocurrency, which is a very dangerous move. With that, I'm going to say thank you guys for watching and hope to see you next time. If you like the things I'm talking about and you want to help support the channel, please like, subscribe. There's some links down below in the comments. And with that, I'm going to say thank you all for watching and until next time. Bye.